Hi everyone, I hope that you guys are good today. Just a very quick analysis of USD slash RUB, which is the Russian ruble, and you guys can see that I've got the monthly chart open. Excuse me, and we can already see that we have this area right here. Let me actually use my drawing tool. We have this area right here, which consists of about four bearish candlesticks. And I can tell you now that, in my humble opinion, this area is as a result of the ongoing war between Ukraine and Russia, as well as the West being involved, in that they've also been advocating for sanctions to be put in place against Russia. So let's get straight into it, guys. So over and above these four candles that we see, is there anything else of interest or valuable that we see on the chart? Let me just make it slightly bigger. Let's see. Is there anything else of interest that we see on the chart? One thing that I do see is that we had, in this region, a W formation with the neckline being there. We saw price go up, breaking that neckline and then coming back to retest it. Unfortunately, the neckline was not able to hold. As you guys know by now, that when it comes to W formations, ideally we would love to see price break the neckline, come back to retest it, and then push further up, meaning that we would have looked for possible buying opportunities at this zone over here. However, it never happened. The neckline of this W formation was not strong enough to hold price in this region, and we saw the market pushing down, right? So, because we have a W structure, just bear with me, guys. Let's see. All right. Because we had rather a W structure here with the neckline being there, when it comes to W formations, what normally happens is that a lot of traders and investors buy on the second leg of the W structure, as well as on the break of the neckline, putting their stop losses just below that W structure. So similarly, in this case over here, where we had this W structure, a lot of investors and traders bought in this region and then bought again at this region when the neckline was broken, putting their stop losses just below that W structure. So it could well be that this entire move to the bottom is actually a stop hunt, and that is because when it comes to W structures, a lot of people put their stop losses just below that structure. So for sure, I can tell you that there's a lot of money sitting below this W structure over here, and we might see the market actually pushing down even further to grab all of those stop losses and trigger that liquidity into the market. So let's continue, guys. So that's the daily chart, or rather the monthly chart. Is there anything else of interest or value that we see on this particular chart? So over and above us having that huge W structure, we also had, or rather have, a small W structure here, the neckline there. Price broke the neckline, came back to retest it, and then push further up. So we would have definitely looked for buying opportunities at this point, and our first take profit would have been this level over here, right? So let's continue. So another thing that is also very interesting is that we actually have an overextended M formation in this region, with the neckline being there. Price broke the neckline, however, we are yet to see a retracement back to the neckline to retest it. And this may actually take place in the future. So what I'm going to do now is actually just add a neckline to that overextended M formation. Just bear with me, guys. So there goes our neckline. And what I'm going to do right now is actually utilize the Fibonacci retracement tool just to see if the neckline aligns with any of the key numbers that we have, or rather any of the key levels that we have on the Fibonacci retracement tool. Just bear with me, guys. There we go. I do not see any key numbers, so I'm just going to delete this Fibonacci tool. let's continue. So from now, what I'm gonna do, or from this point, what I'm gonna do is head down to the weekly chart. So here we are on the weekly chart. So what do we see on the weekly chart? What do we see on the weekly chart? Let's have a look. On the weekly chart, we have this candlestick over here. Just bear with me, guys. We have this candlestick over here, uh, which is a bearish candlestick with a small body and a long lower wick. It is a liquidity candlestick, and that tells us that in the future, price has to get to that point to grab that liquidity, because that liquidity represents money for the market, right? Let's see, what else do we see on the chart? Let's see. Let's see. Actually, I'm actually wrong. The liquidity has been triggered by the market, because we can see that price is already here, and that candlestick is about somewhere here, more or less. So that liquidity has been triggered by the market. So you can just disregard that point. So what else do we see on this weekly chart? Another thing that I see on the weekly chart that is actually very important is the fact that we have a what seems to be a gap in this region. I might be wrong, but as we go down to the smaller charts, we'll be able to see properly. We might have a gap there, and if we do have a gap there, it means that at some point the market rather has to come back to that region to trigger that liquidity, because as I said, liquidity represents money. Let's see, what else do we see on this chart? What else do we see on this chart? Let's see. I don't see anything else really that is particularly very interesting or available. So what I'm going to do right now is head down to the daily chart. Here we are on the daily chart. And I did say that we do have a gap in this region, and there it is. And it's also a very strong area of resistance. So indeed, there's scope for price to actually go back to this level to retest it. However, this level is not important as yet, and that is because we have this neckline over here, and that's the most important level at this point in time, because in the future, as I said, we have an overextended information, and the neckline is yet to be tested. So in the future, we would love to see price go back to the neckline to retest it and possibly push further down, and we would look for further selling opportunities at this point. However, should the market close above the neckline, we would then be looking at price potentially going to that gap that I've just spoken about. So here we are on the daily chart. What do we see on the daily chart? Let's see. What do we see on the daily chart? So on the daily chart, what I'm going to do is, if it allows, I'm going to add a channel. I'm going to add a channel. Just bear with me, guys. So how would I add a channel here? Let's see. Uh, I just need to ensure that my channel is as accurate as can be. Just bear with me, guys. It's a very awkward channel to draw because it's very steep actually. And to be honest, I'm not really a fan of very steep channels, and that is because they are easily broken and become invalid. Okay, that's fine. So there goes our channel. Uh, let's see. Okay, there we go. There we go. there goes our channel. So just to continue, what else do we see on the chart that is interesting or significant, or that we should be paying attention to? I can see that we also had a head and shoulders pattern in this region. Left shoulder, head, head, right hand shoulder, and the neckline is there. However, we never really got to see price break the neckline, come back to the neckline to retest it, and then push further down, right? And also, can you guys see that the neckline of this head and shoulders pattern actually aligns with that gap that we spoke about? And we also have, as I say, the neckline over there. So it's very much a strong area, and we might see in the future price coming to this level to retest this neckline, as well as to trigger that liquidity that we have in that gap. So what I'm going to do actually is just add a line there, which will serve as both a neckline of that head and shoulders pattern, as well as just to remind us that we have a gap over there. There we go. So what else do we see, guys, on this daily chart? Let's see. We have this candlestick over here, which is a liquidity candlestick. Price has to get to that point in the future to trigger that liquidity. We also had an M formation here with a neckline there. We might see price testing that neckline in the future. So what else do we have? Currently we have an M formation here. It's also an overextended M formation, and the neckline is there. Price broke the neckline, then went back to the neckline to retest it. So we would have looked for possible selling opportunities at this point. Let's see. So what I'm going to do actually is just add a neckline to that area. Just bear with me. And just to reiterate, necklines are not actual lines. Necklines are more of an area, right? So let's see. So I'm just going to add my Fibonacci retracement tool just to see if the neckline aligns with any of the key levels that we have on the tool. Just bear with me. So can you guys see that the neckline of this M structure aligns with the 61.8% Fibonacci zone? So what this tells us is that should price from where it is come back to the zone, we may be looking for possible selling opportunities. We may be looking for possible selling opportunities, and we've got confluence. We've got the M formation, we've got the neckline of that M formation, and we have the 61.8% Fibonacci zone. So should price reach this point again, we would need other reasons to be looking for a sell over and above the ones that I have just highlighted. We're not going to sell just by virtue of price retracing back to the neckline, right? I hope that makes sense, guys. Anyway, let's proceed. Another thing that is also very interesting is the fact that we have over here a bearish candlestick. Let me just move this a bit. We have a bearish candlestick over here, which is also a liquidity candlestick. So where it ends, there's a lot of liquidity there, and the market needs to grab that liquidity at one point or another. So from here, what I'm going to do is head down to the H4 chart. However, before I do so, let me just point out that we have another gap at this level. And as I said, guys, gaps represent liquidity. Gaps represent liquidity. So the market has to come here to fill that gap in the future. We have another one here, which is very much close to the neckline of that M structure that we spoke about. So there is scope for price to head up. From here, let me head down to the H4 chart. Here we are on the H4 chart. The first thing that I'm going to do on this H4 chart actually is add my H4 channel. Let's see. How would I add my H4 channel? Let's see. Just bear with me, guys, as I do this. Bear with me, guys, please. Sorry about that. Come on now. Okay, here we are. Okay. I was talking about adding my H4 channel. Let me just do this quickly. There we go. There we go. That should be enough. It's a very awkward channel to draw as well. Just bear with me, guys. Trying to make it as perfect as possible. That should be fine. There we go. So here we are on the H4 channel. So what do we see on this channel? What do we see? So as much as we have this M structure over here, we also have another overextended M structure over here with the neckline being there. The neckline has been broken, however it has not been tested as yet, and that is what we may see happen as well, where price goes back to the neckline to be tested, and we may be looking for further selling opportunities as well at this point. This formation here is very much similar to what we have here. However, we can only deal with this one once price gets to that level. For now, the most important one is this one over here, where we have this M formation. I'm just going to add a little neckline over there. There we go. There goes our neckline. So price may come to this point and then bounce further down. And as I said to you guys, we have liquidity at this point where those two candlesticks end, and the market needs to grab that liquidity. So it may happen that price actually comes back to the neckline, bounces off here, and then pushes further down to grab that liquidity that we have at that point, right? But at this point in time, in as far as buying or selling goes, I don't see any opportunities at this point. I do not see any selling opportunities. However, I do know that a lot of people are seeing this trend line and are seeing a touch here, a touch there possibly, or here, and another touch there, and they're looking to sell. Personally, I don't really trade trend lines, but I do know that a lot of people are selling. But I think the better entry would be to wait for price to get to that point, and then let me just make it clearer. I think the better entry is to wait for price to retest the neckline of that M structure, and then look for possible selling opportunities. I'm not a fan really of seeing a trend line, first touch there, second touch there, third touch there, and then selling. But I do know that a lot of traders do trade that trend line. Nonetheless, let's keep moving. So that is it, guys, in as far as my analysis goes. Number one, if price comes back to the neckline, look for a selling opportunities, or rather for selling opportunities at that level. If price breaks the neckline and then comes to the structure over here, look for possible selling opportunities again at that point, right? And your first take profit should be the zone over here where we have that candlestick, which is a liquidity candlestick. So that is it, guys, in as far as my analysis of USD RUB is concerned. If you have any further questions or comments, just make them in the relevant sections of this video. Thanks guys for watching, and peace out.